Hello, this is Henry Becker with Lighthouse Wealth Management, Director of Research. In this month's video, we're going to talk a little bit about currencies, interest rates, and their impact on global investing markets. You may be aware that the European Central Bank recently lowered their benchmark interest rate to 0. As well, some of their other key interest rates, they moved into negative territory. Actually, they went further into negative territory because that's where they already were. So this got me thinking that perhaps we should do a little bit of a deeper dive into global interest rates.
So what we have in this slide is 4 bands, and these are the interest rates set by the central banks in each of these countries. So we have the negative to 0-ish all the way out to 10% plus. And the key takeaways here is when we look at the negative to 0-ish, and I put 0-ish because the US is essentially at 0, slightly above. But what we're looking at is westernized economies. And at the far end, the 10% plus, we have all emerging market economies, some large ones too, like Russia and Brazil. And then in the middle, we have a mix of both developed and emerging economies. The bottom line here is this is not an accident, as the westernized economies have been reducing interest rates and printing up money. A lot of the flows over the years have went out into the emerging markets. And now that the US has a strengthening currency, we're starting to see a lot of things flowing back towards developed economies, in particular the United States, because we sit on the reserve currency. When we look at this next chart, what we're looking at is it's called the Lighthouse Periodic Table of Investment Returns. And what we're seeing is by year from 2000 all the way out to 2015, and then by best performing asset class to worst. Now this isn't every asset class you could invest in, but it's most of the major ones. And as you can see, one of the predominant trends here is how much the US dollar, how much time the US dollar is spent in the bottom of this chart. And then obviously we can see the dollars rise up to last year, where the dollar really took off in 2013 going up to 2015. But what you also see is in the top of this chart, you see emerging markets and developed international markets have spent a lot of time up to the top, as the US dollar spent a lot of time at the bottom. So it's not a coincidence that we're seeing the dollar on top and commodities in emerging markets in the bottom and floating to the bottom. Now, will this continue? We don't know, but the point here is when you look at this chart, it tells you a lot about how currencies and interest rates affect the returns of asset classes, in particular for U.S. investors.
So as we go forward and other countries continue to lower interest rates in the environment where the United States is on an increasing path on interest rates, we're likely to see a continuation of what we've seen recently in the investing markets, heightened volatility and assets moving towards the United States and the US dollar. As always, we continue to monitor global markets for risks and opportunities, and we stand ready to make changes as necessary. Currently, though, we still see the United States as the cleanest of the dirty shirts out there in the global economy, and therefore we show preference to the United States. So, if you have any questions, issues, concerns, please feel free to reach out to me or anybody here at the Lighthouse team.